Today on Fear and Greed, the long-term boss of ANZ retires and the country's fourth largest bank appoints a European banker with no experience in Australia. The rate of casual employment picks up as the work-from-home phenomenon continues, and the global advertising industry set to push beyond $1 trillion. Plus, more on the terror attack at a Melbourne synagogue, and good and bad news in the latest Newspoll for Anthony Albanese. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Tuesday, the 10th of December 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
You can actually hear me checking the date, can't you?
You can.
It's just,
how's it going?
Oh, God, one day I'm just going to completely come out with the wrong date and you are going to hold me to account. Sean, the main story this morning, the long-term boss of ANZ, Shane Elliott, will retire and be replaced by a Portuguese banker who the bank's board says is an expert in business, risk and technology transformations.
All very good, but does he know much about Australia? I wonder. Shane Elliott has been Chief Executive Officer for 9 years. He is the longest serving boss of a major bank in Australia. The fact that yesterday he retired means that 3 of the 4 banks have gotten new CEOs this year. Not Commonwealth Bank's Matt Common, he's still there, and now the veteran of the group. Shane Elliott has been considered a pretty good CEO, highlighted by his determination to acquire Suncorp's banking business. That's a determination that took him through an ACCC process and appealing the rejection of that deal. More recently, his reputation has probably been tarnished just a touch by an investigation by the securities watchdog, ASIC, into whether traders at the bank manipulated the pricing of a $14 billion government bond sale earlier this year. Mr. Elliott will remain until the middle of next year before handing over to a gentleman called Nuno Matos, Nuno Matos. Nuno Matos. Pretty much an unknown in the Australian banking community. His most recent role as CEO of HSBC in Europe has involved 87,000 employees, 40 million customers, and 35 markets. He also looked after Mexico as well. He's worked in Portugal, Peru, Brazil, Mexico, and Hong Kong. Apparently, he's an expert in business transitions. ANZ has 2 very big ones underway. It's splitting its technology platform into 2. It wants basically an updated version for its retail customers and another updated version for big business institutional customers. And the second thing is integrating that Suncorp business.
Sean, I've got 2 questions for you about all of this. Mm-hmm. Right? Just how different is Australian banking to the rest of the world? And then the secondary part of that, or maybe the most important part, is do global executives do well then coming to Australian financial services institutions?
Okay, the first part. The Australian economy is very bank heavy. I mean, 4 of the top 7 companies in the economy are banks. So they almost play a bigger role in our society than most other economies. So we, whenever the boss of Commonwealth Bank, Westpac, National Australia Bank or ANZ speaks, it's always on the news, people listen, they have the year of politicians. So I think that is different. Second, bank stocks in Australia, especially the Commonwealth Bank, but all of them, are priced much higher. They've got a lot of shareholders, so they have a greater responsibility almost. The third part of it, which I think is really kind of interesting, is that people use banks differently in Australia. So an example is Australians have a far greater number of variable rate mortgages compared to the rest of the world. So the UK, US, mostly they're fixed rate mortgages, we're variable rate mortgages. That makes the world a very different place in terms of monetary policy, of how banks manage risk, that type of stuff. So I think it is different. I mean, do global execs do well in Australia? To be perfectly honest, I don't think in the track history is not particularly good. If you just leave the miners out because they're global companies, AMP's had a couple of high-profile international bosses over the years, not a good track record at all. ANZ actually had a guy called John McFarlane, who then went on to be chairman of Westpac, John was CEO and considered a very successful CEO, a Scotsman. So perhaps that's the exception to the rule. Most top companies in Australia, though, run by Australians. In fact, top 50 company, I'm going to get it wrong, I'm sure. Outside mining, I don't think there's an international CEO who runs a top 50 company outside mining.
Oh, wow. Okay. So this has the potential to generate a lot of headlines, for one thing. It'd be interesting to see what he does.
Yeah, it will. I mean, will he bring his own people in? Certainly investors sold down ANZ yesterday. It was off more than 3%. So the initial reaction isn't particularly positive, but we'll wait and see.
Yeah, we will indeed. All right, Sean, moving on from banking. Now, there are around 2.5 million casual workers in Australia, with the vast majority not wanting to go permanent, while working from home is slightly less common now than it was a year ago.
But still more common than pre-pandemic. There was a bunch of statistics from the Bureau of Stats yesterday. Basically, it said 22.3% of workers are now casual, and the vast majority of those, about 3/4 of them, are happy to keep it that way. That, of course, has implications around industrial relations reforms that the government has introduced and the shift from casualisation to part-time work. It just seems that most people actually want to remain casuals. The reason they like it, flexibility in hours was the number one reason. The number two reason was higher hourly pay rates. Of course, when you're casual, you get a higher hourly pay rate because you don't get holiday pay and stuff like that. Casual employment was certainly hit by the pandemic, went from about 25% to 21% in 2020. It jumped, but now it's come back down. So in actual fact, we're not a particularly casual workforce at the moment. In terms of work from home, 36% of Australians that usually work from home. That's about 4 percentage points higher than the pre-pandemic, so we've stuck with it to some extent anyway. Flexible hours is the main reason there, followed by people operating a business from home. And the final piece of info from the Bureau of Stats yesterday, which I thought was quite interesting, is trade union membership. It's actually on the rise. 13.1% of all employees are now a member of a trade union. It was only 12.5% 2 years ago. Mind you, 10 years ago, it was more than 16%.
Sean, I'm surprised by one of those stats in there. That work from home statistic. 36% of Australians usually work from home, and that's just 4 percentage points higher than pre-pandemic. Number one, I'm surprised that it was so high pre-pandemic.
True.
And I'm quite surprised that it is not much, much, much higher now, even though I know that has been a shift towards back towards the office.
So I think the term there, usually work from home, is important as opposed to sometimes works from home. If you had sometimes works from home, that number would be a lot higher.
Okay. All right. It all comes down to the language, doesn't it?
Oh, it does. It's all about definitions, Michael.
You know what this feels like? It feels like we are like analysing the Reserve Bank statement or something, you know, where they you pore over it looking for individual words, trying to glean more information, which will be happening later today, of course. A bit more on that later on, Sean. ASIO says there is no ongoing threat following a Melbourne synagogue firebombing late last week, an incident which was yesterday designated a terrorist attack.
Director General Mike Burgess, that's Director General of ASIO, said the agency had been conducting its own inquiries, no intelligence to suggest that there is a threat of ongoing terror. Mind you, the national terrorism threat remains at probable. Mr. Burgess said the security environment is volatile and unpredictable, and anti-authority beliefs continue to grow while grievances are spreading. He added that inflamed language can lead to violence, and so people need to watch their words. A special AFP operation, this Australian Federal Police operation, into anti-Semitism has been launched following the attack in Melbourne last week.
All right, Sean, we've got plenty still to cover. We are talking good and bad news for the Prime Minister. We've got plenty of markets news, and Google and Meta help push the global advertising industry to a record high. Lots to come. We'll be back in a moment with the rest of the day's business news. Sean, the latest Newspoll shows the federal government and opposition tied on a two-party preferred basis ahead of the Christmas break, though Anthony Albanese does remain the most preferred Prime Minister.
So it was good news and bad news for the government. The Newspoll in the Australian said two-party preferred. The parties were at 50-50, which is actually a slight improvement for Labor. They were behind 49 to 51. As preferred Prime Minister, 45% have picked Anthony Albanese, 38% Peter Dutton, the rest not so sure. The coalition's primary vote fell 1 point to 39% compared to the ALP on 33%. The Greens are on 11%. Of course, Greens' preferences run to Labor generally. As a result, that's why you get the tightening when it comes to the two-party preferred option. The bad news for the government, though, is that Anthony Albanese is considered the weakest Prime Minister in decades, and opposition leader Peter Dutton is considered a stronger and more decisive leader. He is also Anthony Albanese is also considered increasingly out of touch with voters, losing an advantage over Dutton in areas including cost of living, the economy, and social unrest.
Now, Sean, you spoke about ANZ earlier. How did local markets perform yesterday?
Well, we're in a bit of a holding pattern, waiting until the outcome of today's Reserve Bank board meeting. The board is unlikely to change the benchmark interest rates. It's sitting at 4.35%, a 12-year high. But I suppose we're all wondering whether or not the Reserve Bank will actually soften its language and suggest that the next move in interest rates is down. It hasn't really done that yet. As a result, equity trading wasn't a lot going on. It was actually lower most of the day. Then it spiked right on 4 p.m. to finish. This is the S&P ASX 200 to finish at 8,243 points. Consumer discretionary stocks did best. Energy companies did worst. Not a great day for the miners. Lower iron ore prices hit those guys. Fortescue Metals Group ended the day down more than 1%. Goodman Group did well. It jumped nearly 4%, best of the day. Star Entertainment hit a new low. Sonic Healthcare said it would buy a German lab group. A bad one was Platinum Asset Management. Its share price fell 15%. That's after fund manager Regal Partners walked away from a takeover bid for it, Michael.
And just quickly, international markets, much going on?
Well, the price of gold rose to $26.50 an ounce after China's central bank added bullion to its reserves in November. Something we don't talk much about. Central banks hold gold. The Reserve Bank of Australia has a stack of gold, and they use it almost as a security for the economy. Now, central banks have been buying gold, and China, the Chinese central bank has been a massive buyer of gold, but it just sort of stepped back from that. Now it's back in there, and that's pushing up the price of gold. Aussie dollar continues to sit under 64 US cents. No good news there, really. But Bitcoin, well, it's heading back towards 100,000 US dollars a unit.
Our gold, Sean,
Mm-hmm.
you saw it, didn't you? Back when you worked at the Reserve Bank, you got to go and have a look at some of our gold. But most of ours is now held in London, isn't it? From memory,
Is it? I thought it was in Perth. Maybe it's in London. I don't know.
Yeah, I feel like there was a story a couple of years ago, and this is really going into the archives, that most of ours is now kind of stored in London. But I mean, still, to have been in your position, kind of early in your days at the Reserve Bank, I mean, eons ago.
Bars of gold sitting there, Martin Place in Sydney. It was great.
That's amazing. Amazing experience. You mentioned Bitcoin. Sean, you've got an interview coming up after the show. This is a cracker. Mark Carnegie, who is a long-time investor, one of the most well-known investors, I think, in Australia, because he does not hold back on an opinion. He's now principal of MH Carnegie & Co. and he's getting stuck into cryptos.
Well, yeah, he's really interesting on cryptos because I suppose he's pro-crypto, but he's come around to that view, particularly Bitcoin and what's happened there. Part of it's about regulation in the sector. Part of it's about Donald Trump. So we talk about that. We talk about why he thinks Donald Trump's tariff plans are going to cause all sorts of big problems. He also talks about where there's an opportunity for Australia and why we're not taking advantage of it. As you say, Mark Carnegie, very well known, very outspoken also, and he certainly is in this interview.
Yeah, it's a great one. It's coming up after the show. Sean, Woolworths said it lost about $140 million in food sales due to the 17-day strike at its distribution centres in New South Wales and Victoria, and earnings will be down by about $60 million. But Coles has the opposite problem with Too many customers, Sean.
Apparently, there's been a shift from shoppers towards Coles because Woolies shelves have been understocked. According to a report in The Australian, Coles has had to ask suppliers to ship more goods, put on more people to handle the extra volumes, open more checkouts, deal with high demand. Could you imagine Woolies? They must hate that. I mean, a story like that, here they are ferociously trying to fill up their shelves.
Yeah.
And Coles are like, oh, so many people coming to the store.
Oh, God, it's just, it's one of those complaints that you just hear it and you just hear the teeth just grinding, gnashing together over at Woolworths going, how dare you?
Yeah. Well, the warehouse staff are back at work, which is good news for Woolies.
Sean, Prime Minister Anthony Albanese and the President of Nauru have signed a new treaty providing $100 million for the Nauru budget and $40 million to enhance policing, security, training and infrastructure over 5 years.
As part of the deal, the Commonwealth Bank will provide support from next year. Bendigo Bank is in Nauru now. It's pulling out and Commonwealth Bank will replace it. Anthony Albanese said the treaty underscores the commitment to strengthening Pacific relations, making the region stronger and safer. Nauru's president, David Adeyang, said the treaty will strengthen Nauru's economy and address critical challenges such as e-banking. Isn't it nice to have a final local news story that leads so well into international news, Michael?
It does. It's quite seamless, really, isn't it?
Totally.
Turning to international news, President Joe Biden, Sean, said United States military forces have been conducting airstrikes in Syria to keep the Islamic State group from reasserting itself after the fall of President Bashar al-Assad's government. This is just, it's one of those things that one problem goes in terms of the Assad regime, and there's the potential now for a whole new problem to emerge, right?
Yeah, beware what you wish for. Speaking at the White House, Mr. Biden celebrated Assad's fall as a fundamental act of justice and expressed hope that after decades of oppressive rule, the people of Syria could build a new, freer society. But according to the New York Times, Mr. Biden warned that it was also a moment of risk and uncertainty and that his administration would strive in its final days to prevent terrorists from regaining traction. Meanwhile, the ousted Mr. Assad and his family have reportedly fled to Moscow, where the dictator's chief ally, Russian President Vladimir Putin, has given them asylum.
Donald Trump, in his first post-election TV interview, has said that he wants to see those who investigated his role in the January 6, 2021 riots at the White House jailed. So he's not talking about the people who were involved in the riots. He's talking about the people who investigated him for his role in the January 6 riots.
Yes. So we're talking about politicians who led the inquiry. There were 7 of them. 2 of them were Republicans. It's very rare for a politician in a democracy to want his opponents jailed, at least saying it publicly. Very rare. Mr. Trump also pushed his desire to deport all undocumented immigrants, including their family members, even if they're in the US legally. He was speaking on NBC's Meet the Press. He said all members of that inquiry into those riots, which actually the inquiry itself concluded that Mr. Trump actively inspired his supporters to commit violence in his name. Well, he thinks all those people should be incarcerated.
Finally, Sean, one last one. The global advertising industry will push past $1 trillion in revenue for the first time this year, with Google, Meta, ByteDance, Amazon and Alibaba tipped to earn more than 50% of the total revenue available. That is huge.
Just taken over the world. Media agency Group M estimates that global advertising revenue will increase nearly 10% this year, despite tough economic conditions in larger developed markets like the US and UK. The group forecasts that most of the growth will directly benefit the largest sellers of digital advertising in the US tech sector, rather than providers of other marketing services like ad agencies, according to a report in the Financial Times. Now, the figures don't include the US political advertising market, which contribute about $15.1 billion. It just skews the numbers too much. Digital advertising is forecast to account for 73% of total revenue by the end of next year, or 82% when you include revenue from streaming and digital newspapers and magazines. Globally, total print advertising will be down about 5% this year and more again next year. Audio revenue will remain flat, while TV, including both linear and streaming, will grow slightly, but that's all on the back of streaming.
Okay, up next, Sean, is the Fear and Greed Daily interview with investor Mark Carnegie. That is up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for the free weekly newsletter. It is coming out tomorrow, so get on board that right away and you get Sean's thoughts and opinions on a whole bunch of stories for the week. Thank you very much, Sean.
Thank you, Michael.
It's Tuesday, the 10th of December, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.